Hi, my name is Abhinav Lohia. I'm the Managing Director of Global Business Development at Golden Gate Global EB-5 Investment Fund, headquartered in San Francisco, California, with offices in Chicago, New York, and Irvine, California. In today's video, we will cover frequently asked questions about EB-5 loans, such as, can an EB-5 investor take a loan to make an EB-5 investment? Who can provide a loan for their EB-5 investment? And what are the advantages of taking a loan? To address the first query, yes, absolutely. An EB-5 investor can take a loan to fund their EB-5 investment. There are various sources that they can opt for to make a successful EB-5 investment. The first is friends, which, as long as you can document a relationship with a person that they know you for some time, you've been friends, and they're willing to give you a loan, whether secured or unsecured, it will work for EB-5 investment. Same is true for families. So an EB-5 investor can take a loan from a family member and fund their EB-5 investment. The only thing to keep in mind when taking a loan from friends and family is that the person providing the loan needs to document their source of funds. They should be able to share with USCIS from root to shoot how they earned and accumulated these funds that they're loaning to you. The third option is a very common option where you can take a loan from financial institutions such as banks or credit unions. In majority of the cases, these loans will be secured. That is, they will be secured by one of your assets. It could be a home equity line of credit or HELOC or a loan against property. And it limits the loan to the value of the asset it is secured by. That's one. There are also credit unions, same as banks, that provide these loans and may even offer a much more favorable rate for your loan compared to a big bank. You also have the option to take personal loans, but that really depends on the credit union you're working with. And it is usually limited to only $50,000. The last option is an approved entity, sometimes associated with an EB-5 regional center, that provide loans to facilitate investment. And these loans can be for up to $300,000. Usually they are unsecured. Now, coming to the advantages of taking a loan for an EB-5 investment. The first biggest reason is lack of liquidity. So we find a lot of times, as you know, EB-5 investment requires $800,000. We find that people can come up with $500,000 or $600,000, and they just lack the liquidity to come up with $800,000. So loans are used to bridge that gap. The other reason why EB-5 investors opt for a loan is to preserve liquidity. They may have sights on $800K or $900K, but they find that they have a better use for those funds and they're better off taking a loan. Or they just want to preserve liquidity for an economic event that may need money, they need liquidity, they just want to feel safe about it. The other reason why some people opt for a loan is when you sell an asset, you end up paying capital gains tax, short-term or long-term, or maybe income tax. And to avoid paying those taxes, sometimes they do an economic analysis of their sources and find that taking a loan for an EB-5 is much cheaper than liquidating an asset and paying tax on that. Also, from a USCIS and filing perspective, loans are considered kosher. They are easier to document, especially if they're unsecured loans. It is just a matter of getting a loan, entering into an agreement with an institution, getting the money in your bank account, and then funding the investment, which results in speedy filing. You don't really have to get much into the details. Obviously, things change if it's a secured loan because then you have to document how you acquired the asset securing the loan. But if it's an unsecured loan, obviously it's fairly straightforward. Another reason why a lot of investors take a loan is remittance issues. Various countries outside of the United States have remittance limits, such as China, India, Vietnam, Bangladesh, Pakistan. It becomes difficult to get money out of these countries. So a lot of investors feel that they're better off just taking a loan from a US institution if it's available and use the money within the United States versus doing a remittance planning and trying to get money out of their home country. In addition to that, some investors opt for a loan because some countries have remittance taxes, such as India. India introduced TCS, which stands at 20% of the remittance amount. And to avoid that, some investors feel they're just better off taking a loan in the United States versus paying the government tax at source of up to 20% dollars of remittance. Lastly, as I mentioned, and this is related with speedy filing, it's easier documentation. It is always easier to document money coming from a big financial institution that has credibility in the market versus trying to figure out your own sources and building that confidence with USCIS. Now, coming specifically to loans provided by entities affiliated with a regional center. They provide certain distinct advantages that may not be available if you're taking a loan from a regular bank or a credit union. And these advantages are, it is an opportunity to get an unsecured loan. Certain entities that are affiliated with regional centers or know the regional centers really well will give you a loan for up to $300,000 unsecured. This really helps investors that don't have assets that are worth that much amount or lack the credit history. Or even if they have assets or credit history, this is one of the best opportunities to take a personal loan for up to $300,000, which may never be available to them in any other circumstance. Also, a lot of investors opt for loans from regional centers because the repayment terms are really favorable. A lot of times, regional centers allow up to 2 years to repay the principal, or maybe 3 years, which means while you've taken a loan of, say, $100,000, you don't have to pay installments that repay the principal. You only make interest payments, and you just pay the principal at the end of 2 years or 3 years. So that, again, if you are a person working in the United States, you have RSUs that have not vested, then it gives you this opportunity to get this loan that you repay at your own terms when your RSUs are vested and you get rid of your debt. We have many videos that cover various aspects of the EB-5 visa program. I welcome you to visit our website, 3gfund.com, or our YouTube channel, and keep us posted about how you like our videos, subscribe, and share. Thank you very much.